Good morning, everybody. Happy Friday. So, markets are getting everything that they want and straight up into, well, I think the S&Ps are right at the 50 here. We'll take a look at the other screen, but it's the biggest news here is this rolling over in the 13-week interest rates that we started talking about here when it broke down to see whether it would flip back up or roll back over again. And just like, you know, beginning in 19 and 2022, when we pointed out it started to move up, and that was bearish for the markets. This isn't going to turn out to be bullish immediately, other than what's happened this week. So the markets have been hoping, praying that the Fed would be done. It certainly doesn't mean that they're going to lower interest rates, except you see the 10-year is beginning to fall precipitously now. And this part of the yield curve that was ready to go positive is now rolling back over again. So in the coming weeks, what we will be looking for to see is this 10-year continue to fall. And ideally, this would have gone up as this came down, and this would have turned positive. So in the short term, it's a positive, but this certainly could turn out to be a negative intermediate term. We'll just have to see what happens here. On a positive note, this breadth internal day to day spiked up way up above 2000, pretty much way up to above 2000. And that's a positive to where, at least, in the short term, whatever correction happens, and this is probably going to be a gap and crap today as the prices gap up here into this resistance area. We'll just see how far they come. There's an unfilled gap here at the 200 MA on SPX. I suspect into next week that would be an initial downside target where things may stabilize, give or take. But this run up clearly has created a void, which we'll take a look at on the hourly time frame. Another positive, I like the way this intermediate term breadth internal spikes straight up with this. It's a confirmation of that move. And so now what we'll look for into next week, and you can look for this yourself, is that pulling back toward this zero line is historically what happens. Historically, what happens when the breath gets here and this pulls back to the zero line, that's where this will look to turn higher. Now, we'll just have to see how much higher, since it's moved so far so fast in the short term, but we'll take it as that comes. Dollars also dropping on these lower interest rates. We'll go back to this page. Let's see where the 10-year is. I mean, this is an enormous move in a short amount of time. And a vertical move in a short amount of time. And I suspect that's not a good thing, coming down that much that fast. But, as interest rates, and it's been a little really odd this year. And first of all, as it was moving up based on inflation, exploding government debt, and now it's coming down. And the reason that I think in part, and the short-term interest rates coming down like that, is as this data is coming out in time, we're going to hear that, I think it's already out there, a recession. It's just everybody's number kickers are looking for the confirmation of the numbers to confirm that on the historical measurement. But there's enough stuff going out there just looking at the broader markets in different sectors that support that. And now with interest rates dropping as they are, it's, we'll eventually, we're going to get the confirmation, and then we'll see how the market reacts to that. Apple's earnings today, and talking about China, I mean that doesn't they're not in a vacuum. You know, so far, the markets like what they're hearing. They're rejoicing over the thought, as they have every moment in time when they thought H number was, the Fed is going to back off. And so, these numbers coming out weaker, unemployment, payrolls decline, all of that is what they've been wanting to hear all along. And now they've got it. What up will be left to party on, we'll see. Let's take a look at these markets, where they're at. This was yesterday, I believe. I don't know if that's updating today. Let's look at the Qs since we get the overnight. Yeah. And it's right into the 50 MA and into this congestion. It's backing off a little bit. You can see the cursor on the hourly chart. So as it gets closer to that congestion area, whereas yesterday it gapped above these pivot highs. And the transports, they're up here into the declining 20. It's right into where they should decline from. The Dow's had a monster move up right into these moving averages, the 50 and the 200. And it'll be interesting next week when this Dow comes down a little bit, and why this is marked off here. The 50 is going to cross below the 20, and let's see how the media does or avoids that conversation that they usually have about the death cross, moving that 50 moving down under the 200 MA after this rally. John's asking me if the 10-year have support at 4.5. I already had that up there, but there's a pivot right there, 4.5. I got this alert, and I had the alert up here, which never triggered. I'll just put this about today's high, and so that should stabilize here. And if this does start to move up, the correlation has been so tight, even intraday, with interest rates and equities. And if this starts to move up from here and markets gapping up into resistance, well, we know there's going to be sellers there. We'll see some selling, which would just make sense today, just based on the move up that we saw, coming into a resistance area, and then it would be selling. And it was at the peak there, almost touched the 50 MA. And you can see it's right at that pivot on the hourly chart, and that little topping pattern that I had marked off back there, where it started to fall from. So in an obvious point where the majority will be looking at and thinking sell into this area. SPX, and I mentioned yesterday, wait as far as the top number goes, because it just touched the top number yesterday, which was 43.15. But if you waited, the way things were moving up, you didn't get in trouble. The bottom line, which was way down here, was never even came close. That obvious. So today, I would just wait to see if markets peter out a little bit, and this number may have backed off a little bit since the markets have come in a little bit. Let's see. No, 43.80, still there. A little less premium than it was a few minutes ago, but 43.80. That'll be fine today. Down here, I suspect it, I would be surprised to see markets come down that much today. I don't think so, but I think it's a higher probability that they don't get up here versus, down here. Opening up near the 50, there'll be, I should be buyers filling the gap, but you can see the way they went up here. Filling the gap really doesn't do much of anything other than just saying, hey, there's a momentary stall, because the way they advanced and just a grind higher yesterday, there's little to no support. So, you know, this unfilled gap down here, which, I don't know that it'll get it. I'm not sure it'll get there way down here. It certainly could next week, going up as high as it did with no support. Will it come all the way back down here to this unfilled gap? And so, based on the internals and the way this moved, it shouldn't, but that doesn't mean it won't. So, again, we'll see what happens next week and what happens here at the end of the day. Um, but coming down here, it would be a little deep, but anyway, looking into the end of the year and the seasonality, should be viable anyway. All right. The Russell had a nice move off of the low. That was a new closing low. It's at the bottom of the range. Figured buyers are going to be there. So I think this has greater potential to hold up, maybe great potential if things come down to form a W type of bottom. Because as prices come down like this and accelerate, W bottoms are noted with shallow retracements. And this is up at this, where is it? Right here. It's up a little higher with the gap up, but maybe a little bit more. But, coming back down into this area, it's probably going to make a higher low. And just take note of the gap fill, put an alert there. Let the computer monitor that. We looked at transports, but that's the ETF. Up into, and I guess that'll gap up to a little above the 20 at the open. And look at that drop, even on the 5-year. These are tremendous moves in interest rates in a short amount of time. And it's just institutions and just moving like a herd, and it's what they do these days. That is a monster move to the downside in a short amount of time. And oil, not really doing much of anything. The dollar we looked at, that is collapsed, breakout failure. And with it, short-term interest rates coming down, that's what you would expect to happen. With the interest rates coming down like that, the dollar would collapse. So far, holding on those pivots. And so for today, I'm just going to be looking to see what holds up the best. Dan might cover Apple, but that came off of the pre-market low. It was a bad ticks, but it was, way down here. And, the markets are taking this lightly, but, this is typically would move the markets, and it's just kind of blowing it off. But I think it has bigger implications when they talk about business in China. And but it's off of the lows here, still gapping down significantly. And it'll be interesting to see how this all plays out here by the end of the day. All yours, Dan.
Good morning. I was thinking the exact same thing on Apple. Like, in the past, so much market reaction to earnings, news, etc., is what mood the market is in at that time, of whether it's going to dismiss or punish news. And right now it's in a party mode, so it's giving them a pass, so to speak. But at another time where markets are more jittery and not in party mode, Apple warning of slowdown. And what is it? This fifth consecutive slowing sales. it would get its head chopped off even more. So yeah, I agree with Greg's comment there. Market's in party mode. Um, look at this 15-minute chart on the spiders. That is incredibly bullish. Started right here on this breakout, and just, yesterday was a gap and go day. And that retracement concepts, that to me suggests a low for the year. Whether it's the all-time low, who the heck knows? I think a recession's coming next year, slow down, all this kind of jazz, but we're traders, so we take it day by day. And let's look at a bunch of earnings. So, Greg, I have the same dilemma that I was starting to talk about yesterday, that I'm finding a number of bullish new patterns. Like, look at Triple M. That looks like it can go up a couple bucks. Ember's head and shoulder. So, how much of the extended market do we put in our calculation of entering new trades like this? This LVS looks great. AI. There's a number of patterns that are not extended that look good. So that's my dilemma. A square. My mentioned possible breakdown failure. Now that's a big old gap. That looks like a low for a very long time. So that's put spread idea. Look for pullbacks. This is a big mess. Dunking. We were talking about a condor yesterday. Didn't do anything. I did a couple earnings trades. We'll get to them. SWN would. I was hoping this would be a 1, 2, 3 for Monday, but it looks like it's gapping up. A coin. I was saying let's get through earnings today, but this could be the start of a very very nice bottom, daily, weekly, monthly. Carvana gapping down, a mess. So today's Friday. I'll be looking for 0 DTE trades also. Probably favoring the call side if we take out 30-minute low in the market, but if at minimum these 15-minute charts have to crack. So that's gapping up, nothing to do now. NET was down, recovering. That's a mess though. Redfin could be the start of a bottoming pattern. We'll see how it closes. Monster, nothing to do. It's gapping up, extended. I'd be selling that gap. This was down, now it's flat. So see, it looks like there's more examples of bearish gaps getting empty. Now this is one that went against us. We shorted $50 puts, so we said we would take assignment. So 50 is way down here, but that's an ugly gap. I can't sugarcoat it. But we said, we take assignment if needed. That's an ugly downtrend, deleting you. Whiskey was down a lot last night, recovering, but just rallying into resistance, no interest. MTZ, nothing. So somebody knew something. Look at these two bars and bottoming tails and volume, and then today's earnings, or last night, whatever. Bill looks like the whackage of the day. I'm going to put that in a window. I'm just in my excessive gap category. Let's see if buyers step up. RKT looks like a bottoming, climb on the weekly. OUT had a nice closing breakout. I don't see any gaps, but if it opens flat, maybe 5-10 minutes wait, and then over yesterday's high looks higher. Expedia up a lot, 105. That's a pro gap. That's a pro gap. Look at this nasty downtrend. and it's gapping over all of this. So and then booking had earnings too, a competitor, but this one's gapping under this. Now, if this opened flat, this would have been a beautiful, beautiful turn retest at the 200 with a price void that you could buy over yesterday's high. But, earnings, it's destroying the pattern. PXD opening up a little bit. I actually bought 250 calls as a little lottery ticket. Team, this one we did a condor out of the money 215 call spread, 150 put spread. So we're still $18 out of the money on the put side. So I'll be looking to close the short puts at the open. Oh, actually, I sent this out and you all weren't here. Let me give it to you right now. So that's the team alert that I sent Telegram. Now Dropbox, I thought this was up last night. Now it's flat. Nothing to do there. I just had ED alarm go off. Now this is a new trade setup. It's a closing breakout, target 200-ish. And now it's gapping over this red bar. So that looks good. I have team in the other computer. So let me put Ed here, bottom right. LYV, big gap up, but nothing to do. You're gone. MCW, potential bottoming pattern, but not a great void. Delete you. B-Fly. It's an over-the-counter stock. Over yesterday's high. If you like bottom fishing penny stocks. Wow, spiders, diamonds, IWM making new highs here pre-market. And Qs are holding extremely well with that Apple down. So market's in a bullish mood. But we got the weekend here. So I mean, just use common sense. You had to move from here to here. We're gapping up. Maybe we run a couple more dollars. I mean, unless you're an institution that is not a swing trader, if you're a swing trader, it's already blasted all over the news. We're going to have a lot of protests and DC over the Israeli thing this weekend. And, I surely would have zero desire to hold a pattern that looked like that. All right, this is gapping to the prior low. Nothing to do. FND was getting whacked pretty big earlier. That's, no pattern. It's got to come back to it. Hassie, I was hoping it would open flat, and then I said you could buy the high. Well, that's a nice void. Target like 21-ish. But if it's gapping to 20, then no, gap's too big. Docking could be the start of a bottoming pattern with that gap cube. I don't see any gaps, but over yesterday's high would be a bounce in a downtrend. I don't see any prints. KTOS, I was hoping for a 1, 2, 3. This is a closing breakout. It looks like it's opening up a few pennies, bullish weekly, monthly. So KTOS looks higher. This is a big bull rectangle. I don't see any gaps. SIRS bottoming pattern looks higher, maybe to a $1.80, 190. PBA closing breakout right at the 200. Nothing to do. Well, it shows it down a little bit. Maybe we get a 1, 2, 3. LNT, maybe yesterday's high. We get $1 or so out of it. Pod was shorted way out of the money puts yesterday. So we'll be looking to take the money on that. ED I mentioned as a new long. This is a big mess, gapping down. Potential bottoming pattern, but a mess. Ryan, mess. Party City, ugly gap down. We'll come back. Those were all last night earnings. This is pre-market. Not that it matters. We'll just separate them that way so I can watch them. Yelp. I don't see any. I don't see any. I don't see any volume gap up, but it shows it up here almost $2. SRE looks like it could go to the 200 over yesterday's high, of course. Hey, this thing's moving right now. D. It's just popping right now. This is a bottom. Look at all these tails at the same level. Keep an eye on that. Day trade, possible swing. IT, gap's too big to 350. That's an igniting closing bar. 15-minute is strong. That could go to, look, I was going to say it could go to 1770. It's at 1750. So gap's actually too big. Gap breakout, bullish weekly monthly. We'll keep an eye on that on a pullback. Chud selling off right now, 84.50. That's an ugly gap. QSR, nothing to do. Range bound, but ugly gap. F1. MGA up $5. Gap's too big, 54. CRBG, no pattern. Libertic, nothing. I guess that a ZTS alarm go off. Oh, that was from yesterday. Nice. This was an earnings trade yesterday. I shorted puts on F-Wonk is a mess. SIBO looks like it's opening flat. It's on strong uptrend, but breakout failure. All right, pod up alarm. We knew about that. PSN. iTree, this was on your list yesterday. My alarm went off. WPC. Nah, ugly gap. All right, SIBO is now up $2, but it's a mess. PAA, no pattern, top of the range. AES, gapped up. QSR, there's a bear island reversal. QSR. Oh, let me check my team. There's an ugly gap. Now let me, you typically got to wait a few minutes for the spreads to tighten. But yeah, if right now midpoint on the whole thing is a negative number, so that means the spreads. So now I got to go individually, and now the call side I'm going to let expire at full profit. We're short the 212s, and then I'll just set an alarm. So yeah, the put side, let's try to close the put spread at 5 cents. Costco up